and welcome again to another edition of Market Analysis for today, October 8th of 2024. I'm Giovanni Benacour, and this is the recording previous to the U.S. session open. All right, well, markets are still trying to process the non-farm payrolls report from Friday. Initial reaction to that report was optimism that the stronger than expected labor market will help the economy to keep chugging along, while the Federal Reserve will still have room to lower interest rates and stocks rose. But by Monday, however, traders weren't so sure. There was a clue on Friday that the good feelings couldn't last. While stocks initially rose, so did bond yields as traders pair expectations for the extended of the Fed rate cuts. It often doesn't work like that. Stocks tend to react well to lower bond yields and vice versa. And that's the narrative for this week. It's not just the strength of the U.S. economy that has been a little surprising. The conflict in the Middle East is pushing up energy prices as it threatens to involve Iran, a major oil producer. That could create new inflation worries for the Fed that will stop it lowering rates as much as previously expected. Crude prices are up more than 10% over the past month, which is a substantial move. And let's just remember that right before the Ukraine war broke out, oil prices were very, very high, and that was a big concern, obviously a big contributor to the inflation hike across the globe. Now, China, the world's second biggest economy, had looked like it might recover after interest rate cuts and promises of more stimulus, which will help U.S. growth. That sunnier outlook was tempered yesterday, tempered on today. So let's take a look at what we can speculate in regards to the markets. So let's just go down to half an hour charts and just take a look at what that fluctuation might be. So we're seeing that since yesterday, market has been flattish. In reality, just humming, just really fluctuating real close to the pivot point. And again, this is the typical price that we obtained from adding last week's highs, lows, and close of the 1 week chart, and we obtained that value, which was really not much of a difference from the previous week of the pivot point. So again, we'll see another attempt at going higher, or will we come out and finally break that 20,000 psychological support level that we have and trend lower? Well, just be a trend follower. All right. Again, we are going to start the new phase of earnings season. So Bank of New York Mellon is going to be reporting, and companies like BlackRock are going to be reporting tomorrow on Thursday. We're going to be getting the CPI and the PPI. So a lot of information is going to come out. And tomorrow, obviously, we're going to have the FOMC minutes. So for right now, I'm speculating that we are going to sustain ourselves throughout, within this area. If you look at the NASDAQ and it's half an hour, this white line right here, this is a 200-day moving average. The yellow one is a 50-day moving average. And obviously, we have the 20 below the 200. So this is giving a lot of support for the market. So obviously, the market needs to trade below across this three different moving averages. Okay, and 20,000 is right there again. So we throughout yesterday, we did kind of fluctuate around it a little bit above and below. And we obviously just broke up to the upside. So that momentum could probably be spilled over into U.S. session open. The S&P 500 has similar behavior, but the moving averages are in a different scenario. The 200 is on top of the 50, and the 20 is still below them both. So again, this is a great setup for a breakout. Will we break out to the upside? Will we break out to the downside? That's yet to be determined by when the market opens. So let's take a look at the Dow. The Dow also, just really look at how the market has just respected this level of support. So we're gonna still be there using those same levels. basically nothing has changed in regards to our level of supports and resistance, but we are waiting for that probable breakout to the upside in the indices, or will it break out to the downside? So again, be a trend follower, and the trend has been higher. So again, remember, earnings season is going to start again. So again, the Russell 2000, so 2,205 is the pivot point. It is further away from the other two, but again, the moving averages are just like the NASDAQ. So keep that in mind. A breakout is possible to the upside. Crude oil, after having a nice run yesterday up towards almost $79 marker, it has retreated from there. Okay, retreated and basically trading below the 50 and the 20-day moving average. And in this chart, the bands are squeezing. So out of this squeeze, volatility should rise, and then a breakout will occur. A breakout to the upside, a breakout to the downside. That's obviously, I'm favoring it to the upside. But as per the RSI, we are seeing that we are below the 50 marker, which implies that we have a momentum build up to a bearish scenario. So perhaps we'll have a leg down towards a level of support 74.5, and then just do a reversal trade to the upside, perhaps coming back up above our level of 50-day moving average, which is 75.85. So those are levels that you can use as probable levels of support and resistance. Now let's take a look at Nat Gas. So Nat Gas is a different scenario. It did fluctuate lower, breaking that level of support that we had placed. So let's just use 250. It's a nice round psychological number. And let's use the top of the Bollinger Band as a level of resistance for Nat Gas, going with the trend, which is in this half an hour to the downside. So selling Nat Gas. Gold. So, okay, so, whoa, that's a big wick. That's a long wick. Right, so gold, after just dropping like a little stone, like a little golden stone, it bounced up that 2640, also a good level of support. So my support is way down here. I'm going to raise that puppy, and let's just use this area right here, because the reason I use it is because obviously we have here an inverted hammer, so that shows that pointed out towards a move to the upside. So that's where I'm going to use my level of support. That's where the market rebound off anyhow. So the resistance, let's just use 2660 in this half an hour and see if we'll be able to reach that as a target. The 200-day moving average is right above the market right now, so we need to see as it could probably make a nice move to the upside. That only also is going to have some pressure on that. Silver is trading below that level of support, so we're going to have to bring that puppy down. It bounced off that $31 level, psychological level, obviously. So let's just use 3080 just because it has bounced off of that already, and let's bring down our level of resistance to the 3160 level. Okay, so again, the trend is your friend. So far is trending lower. Go with it. Okay, copper, it has completely traded below our level of support, so let's just lower that. Okay, so we have 430.40. Let's just use the lower Bollinger Band as a level of support, and then let's use 4.5. Where you go? Where you go? Okay, so let's use 4.5 as a level of resistance. That's our target. It has rebounded off that level. As you see here. That's why I'm using that. So boom. Let's see if we have a recovery in copper. Bitcoin is just churning along. I mean, just no sideways trading, really, just staying within range. So above the 62,000, below the 62,000, right in that tight channel that is being created right now. So, and again, also a breakout is possible, either way to the upside, to the downside. You just never know, Bitcoin. So euro, okay, so the currencies, the euro is looking to stay strongly north of that 109. So 109,550 could be a nice level of support. Let's just leave that 110 there for the resistance. So we did open with a small gap down in this half an hour. So obviously momentum being built up, RSI below the 50. So momentum to the downside being bearish. That's where we are perhaps heading. Then we have the pound, which is also did a small breakout, not even just a little, head bun up here towards the upper Bollinger Band, and now is fluctuating to the downside. The 50 and the 20 are basically tied together, so that'll give us a nice level of support. Let's see if it'll rebound from there. And the dollar index is obviously going to be, saying a whole lot about what's going to happen with the currencies. So let's just use that 200-day moving average as our level of support and see if this breakout will continue to the upside. If it does continue to the upside, we'll see pressure on the metals and on the currencies. That's it for me today. Have a great trading day, and I'll see you tomorrow.